Hi, Ron Benning, real estate investment expert, back with another 2-minute tip. And today's tip, I want to talk a little bit about how mortgage interest rates are set for residential 2 through 4 properties. So the first thing is that you're going to notice that when you're looking at rate quotes, your rate for a 2 to 4 unit property is going to be about 0.5% higher than the conventional single family rate. You take about 1/4% hit for being a non-owner occupied and 1/4% hit for being a 2 to 4 unit property. Now let's move on to how mortgage interest rates are set. We see the Fed aggressively raising interest rates in periods where the economy is either overheated or there's high inflation. And if you look at this chart here for 2022, you're going to see how the Fed has been raising interest rates. Now, if you look at this second chart, you're going to notice that even though the Fed is still aggressively raising interest rates, that the interest rates on mortgages are starting to come down. Now, why is this happening? Because when the Fed raises interest rates, they are raising the short-term rates for things like credit cards and home equity loans. The way that mortgage companies and banks set the rate for mortgages is using a more long-term approach. And the best way to track that would be looking at what is trending in the 10-year Treasury bill. The 10-year Treasury bill is considered a very safe investment. And when mortgage companies package their loans together and make bonds, they price those bonds with a little bit better return than the 10-year Treasury bill, because obviously the Treasury bill is a little bit safer. So don't be surprised in periods where the Fed is still raising interest rates if the mortgage rates start to come down, if the longer term solution seems to be present, which is taming inflation, or the overheated economy starts to cool down a little bit. None of us really know what's going to happen for sure, but many of us believe that between the spring and summer of next year, we're going to start to see better interest rates. And one of the things that we can do is we can look at strategies by talking to me or the local expert you're working with on how we can best handle the short-term problem of today's interest rates. Hopefully this will help to clear up some of the confusion about how rates are set.